Intel has moved on really from a painful third quarter and tried to tell us that it's regaining footing going forward. Take it from there, Tom.
Slightly is the key here. A lot of what they did in the most recent quarter was they slashed expenses, they cut headcount, they have taken a step back on investor payouts. So a lot of this is about retrenching. They did give a forecast for the fourth quarter that slightly exceeded analysts' expectations. That was enough to get the stock moving. It's definitely up in after hours, but I look at the report and I see that they are not out of the woods yet by any stretch of the imagination.
Hello, everyone. Today we're diving into Intel's recent financial results and its outlook moving forward. By the end of this video, you'll know whether Intel's stock is worth holding, buying, or if it's time to sell, so stay tuned to get the full picture. And remember, if you're interested in more deep dives like this one, be sure to subscribe to our newsletter, link in the description. Now, Intel recently reported a huge financial setback in Q3 2024 with a historic net loss of $16.6 billion. But here's the twist. Despite this record-breaking loss, Intel's stock actually surged by 8.4%. This surprising rally was fueled by better-than-expected revenue and a strong sales forecast for Q4, which has definitely piqued investor interest. Intel's data center growth and new client acquisitions are bringing optimism, even though challenges persist, especially with their Gaudi AI chips, which haven't quite lived up to revenue expectations. Let's take a closer look at the numbers. In Q3 2024, Intel generated $13.3 billion in revenue, a drop from Q3 2023, driven by declines in key areas like the Client Computing Group and Altera revenue. The gross margin took a major hit too, falling from 42.5% last year to just 15% this quarter. This was largely due to non-cash impairments and some accelerated depreciation on manufacturing assets. On top of that, Intel recorded $9.1 billion in operating losses and had to navigate significant restructuring charges. So, while these financial hurdles are clearly weighing down Intel's short-term profitability, the company is banking on long-term benefits from its current strategic shifts and investments. Intel's strategic focus is all about pushing forward with its IDM 2.0 strategy. This includes expanding its manufacturing capabilities and forming key partnerships to strengthen its foundry business. Additionally, the launch of the new Intel Xeon 6 processor and Gaudi 3 AI accelerator marks Intel's big push into the AI market. While these new products are promising for Intel's future growth, high initial costs and slower than expected adoption of certain technologies are making the near-term financial impact a bit shaky. Let's also discuss the risks Intel is facing. It's no secret that the competitive landscape for chip makers is intense, especially in AI and data center sectors. And with global tensions potentially affecting international operations, Intel's ambitious restructuring efforts carry some execution risk. Major shifts to Intel's business model and workforce require precision, and any hiccups could dampen the company's financial recovery. On the technical side, Intel's stock has been volatile, showing big ups and downs in the past year. With a 52-week low at 18.51 cents and a high at $51.28, the stock is definitely a bit unpredictable. Currently, the 50-day moving average sits at $21.70 and the 200-day at $31.91, reflecting a bearish trend. The RSI is around 40, which means it's neither overbought nor oversold, while the MACD indicates ongoing bearish momentum. Key support is around that 52-week low of 18.51 cents, with resistance close to $23.57, making these critical points for investors to watch. So what's the verdict on Intel as an investment? Looking at the valuation, Intel's forward PE ratio is 21.48, which seems reasonable for its current market cap of nearly $100 billion. With the stock trading at a significant discount from its recent highs, there's a sense that it could be undervalued, especially if Intel's restructuring starts showing positive results. For the short-term outlook over the next 3 to 6 months, we're giving Intel a hold rating. The market is still volatile, and Intel's financial conditions are challenging with high restructuring costs and declining revenue. The stock may have some upside if Intel's strategic moves pay off soon, but waiting for clearer recovery signs could be a safer play. For long-term investors looking 3+ years down the line, Intel's buy rating holds stronger promise. The company's fundamentals are expected to improve as its strategic investments start to mature. With an experienced management team and a focus on innovation, Intel's positioning remains competitive, especially with its strong push into AI and advanced processors. If Intel successfully navigates its current challenges, there's solid potential for value growth here. Thank you for watching. If you enjoyed this analysis, please like, subscribe, and leave a comment with your thoughts on Intel's future. And don't forget to check the description for our newsletter link to stay updated on the latest investment insights. Disclaimer: this video is for informational purposes only and does not constitute financial or investment advice. Always do your own research and consult a financial advisor before making investment decisions. Investing involves risks, including potential loss of principal.